What's going on, everybody? It's your boy James. Today we're going to be talking about the Federal Housing Administration pretty much approving the 40-year mortgage. And pretty sure you guys probably already heard about it. And yeah, we're just going to do a quick pro and con video of this. And we're going to be showing you guys what the difference in terms of monthly payment would look like. So guys, if you guys haven't find out, FHA just recently approved, and it's really come into effect sometime in, say, May 8th, 2023, where you can extend and do a 30-year mortgage to a 40-year mortgage. The goal here is to make housing more affordable, is really to reduce the monthly payment of a mortgage. So, the monthly payment has been increasing within the last couple of years due to interest rate going up, due to home price going up. And in order for the Federal Housing Administration, they need to make sure that monthly payment is decreased. Okay, so in order for them to do that, they need to extend the 30-year mortgage to a 40-year mortgage. So guys, let's get to it. Let's do a comparison real quick. We just did a comparison. So let's just say we buy a house for $500,000. And within that $500,000, we put 10% down, and interest rate would be around 6.125. And then we tax around $5,000. PMI is about 0.5%. And then we do home insurance, about $700. And once we hit calculate, what we have here is the current 30-year fixed rate. Right now, we're seeing about $3,996 per month with PMI, with just today market. But if we extend it to a 40-year mortgage, if we do the same thing, all we do is just change the 40-year terms. What we see is that the number goes down to $3,177. So if you guys do the math really quickly, it doesn't really save you guys that much money in terms of monthly payments. So $3,396 and 75. Subtract, say, this number right here, which is $3,177.78. That's about $218 a month less. What is the pro? What is the con of all of this? The reason why this is important is because you want to spread the monthly payment over a longer period of time. Housing is super important. And the reason why FHA is doing this is because they want affordability, right? They want people to be able to afford to buy a house. But this brings into the question of, it's going to make buying a lot harder because there's going to be a lot of buyers going to come in, and it's going to continue to push property price up. So the pro of this, okay guys, is that it reduces your monthly payment, so then you can have more cash to do whatever you need to pay bills and to invest. Also guys, extending it out to a 40-year mortgage, of course, there's a lot of tax benefit also as well. So depending on your area, your county tax and the tax law in your area, there's a lot of interest that can be deducted in your mortgage through your taxable income. So talk to your CPA about that, but taxes play an important role into this. Other pros is that more people are going to invest in properties. More people can buy. If you're a homeowner, your home will most likely appreciate over time because more and more people are able to buy. Another pro is that it's easier for people to get qualified for a mortgage because their debt to income ratio is a lot lower now that their monthly payment for their house is a lot lower. So they can afford to buy more. So you guys can borrow more because your monthly payment is lower. Home ownership is pretty important, is that it's a one way for you guys to protect from inflation. Instead of throwing that money and putting it into rent, you're putting that money into your house, and the house will appreciate over time. And that's one of the good thing about it. Okay, so if you want to learn more about this type of programs and you want to dive more into the rules and the regulations, go to govinfo.gov right here and dig into this content right here in terms of what are the rules of the 40-year mortgage. But essentially, you're saving about $218 a month for a $500,000 house if the interest rate is around 6.125. Okay, there's a lot of pros. It's going to increase a lot of home ownerships. It's going to protect your inflation. But let's talk about some of the cons. So some of the cons that we do see here is that higher interest rate costs. So for example, if you're doing a 40-year mortgage versus a 30-year mortgage versus a 15-year mortgage, the 40-year mortgage is always going to be a higher percent in terms of interest rate, right? Instead of paying 6.125 for a 30-year, you might pay about a 6.5. So that is the con. So nothing is free in life. So a 40-year mortgage, be aware that interest rate over time and interest rate will be a little bit higher. Another thing is that it will take you guys a lot longer to build equity in the house, because a lot of times your first couple of years in terms of that monthly payment will be going toward interest and taxes. And you won't be able to build that equity and pay down your loan as quickly, because really after the 5th year is when your interest is when you start paying down the most in terms of your principal. Well, those are something I think that you want to be aware of in terms of some of the cons that will be able to affect you in terms of buying and doing a 40-year mortgage. Another thing that we can think of is that you're saving, okay? Because a lot of money is going to interest and taxes and all that stuff, this affect your retirement, right? So instead of using that money and putting it to a retirement account, saving it, you're just paying taxes and interest, and it's not a fun thing. Being in a 40-year mortgage, it's just more debt. Instead of paying it within the next 30 years, you're gonna be in debt for 40 years. Pretty much you're gonna be in debt the rest of your life. So it could be very stressful, but just keep that in mind. Another thing, a 40-year payment, of course, there is also risk similar to a 30-year mortgage, is that the longer the repayment, you're more likely to be like some kind of economic system malfunction, right? And you don't want to put yourself in terms of risk, right? You don't want to miss your mortgage payment or be in default. So those are some of the key risks. And one last thing, one other thing is that commitment. Instead of being a 30-year or 15-year commitment on a mortgage, it's a longer commitment. Those are some of the things that we see, but really, if you were to ask me, is a 30-year mortgage or a 40-year mortgage better? For me, personally, I would prefer a lower monthly mortgage. Now, let's just say if interest rate do end up going down, instead of being 6%, and let's just say it goes down to 3%, and 3% hypothetically, a 40-year mortgage, your monthly payment for a 30-year mortgage is $2,559. So let's just say in the future, when you refinance your mortgage, you refinance it to a 3% mortgage, let's just say, but we don't know when that's going to be, your monthly payment will be around $2,273, which is around $300 off. So guys, there you have it. There's a lot of pros in terms of this, more than con, more so for home ownership. So if you guys haven't decide to own a property yet, do look into it. There's a lot of programs out there that will save you a ton of money when it comes to buying. Buying real estate is one way for you guys to protect against inflation. Of course, you want to own company and businesses and all that stuff, but with all the programs like the Dream for All California program, the 40-year mortgage, we're making home more affordable for the average American. If you guys are interested in learning how to buy, sell, or invest in real estate, let us know how we can help you guys in your journey. Our contact information is below. Go to buywithfam.com, and we'll love to help you guys and learn how we can help you guys save thousands and thousands of dollars when it comes to buying, and we'll help you guys through the process. This is James with the Fam Real Estate Group. My wife Mariz also as well. We're going to be signing out. Hopefully enjoy this type of video. Peace and love, guys.